Bitcoin pops after Powell signals rate cuts at Jackson Hole, and RFK Jr. endorses Trump and pulls out of the race. Short-dated vols continue to get hit, but election buckets hold up as gamma sellers get rewarded, and ETH vols are hit harder than Bitcoin as dominance makes another new high. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT. How's it going, man?
Yeah, good. How you doing?
I'm good. So we had a nice little pop, right, this week?
Yes, yeah, we did. Yeah.
It's getting political again.
It is getting political. The thing that's in my head is that Powell's phrase, "The time has come for policy to adjust," which for me had shades of, I don't remember, back in November 21.
Yeah.
When he said, the time has come to drop the phrase transitory. And
when they started tightening like crazy.
Yeah, and it was kind of a real kind of purposeful phrase to signal policy's changing. Like things are different now. And I remember, actually, if you remember, because I remember tweeting at the time saying this felt like his "we're a long way from transitory" comments that he made in 2018, and markets tanked and everything. And I remember going, this is like that, this is a big signal. And markets rallied for a couple more weeks after. I think Bitcoin made sort of new highs and stuff into early December, and then everything fucking tanked. It kind of had that sort of feel to it, that it was a very definite, policy is changing and we're going to be cutting. So I kind of got the initial pop and everything, but I still think that's got a lot longer to go. But it was definitely, he'd been quite balanced, I think, until this point. But that was a very clear.
He didn't want to be Burns, did he? Doesn't want to be
no
Arthur Burns.
No, and he it was very I think if you're bearish on these markets, it was probably a real sort of kick for you, because whereas he's been trying to balance all the risks, it was kind of right. We've done inflation.
Yeah, the jobs are rolling over too quick for him.
And he described the cooling of the labour market as unmistakable. And they don't want any further cooling. Yeah. So it was a real. I thought it was kind of a pivot of such
stronger statements than we're used to hearing.
Yeah. So he's fired the starting gun. We've been talking on here about this sort of macro purgatory and not being able to embrace the rate cuts.
But they're still very unlikely to go 50, I would say, right?
I think unlikely. I mean,
because they might as well say 50 for emergencies.
Yeah, but I think what he's going to probably do is do sequential 25 bip cuts.
Yeah.
But also he kind of kept the door open to 50. So I mean, let's see what the data comes out like in the intervening period. But yeah, it was definitely dovish. I mean, you think it was only a couple of months ago there were some people calling saying we might get rate hikes, and so it's quite a shift.
But I find it interesting, right? I'm a market observer and I look at cross assets, right? So I look at everything like crypto, rates, equities, and the rates market didn't really reprice, because the rates market was already priced for 30% chance of a 50 bip cut, 70% chance of a 25. So yes, we might have had some choppiness, but the rates market was kind of unchanged after it. And yet the equity markets and the crypto market is it's dovish. Well, actually, the main market that cares about rates is telling you that's nothing done, right?
Yeah, and I guess it goes to show you that sometimes all of these markets can kind of be out of sync a little bit. I definitely feel the problem with rates markets is you have to have a probability weighted sort of pricing in there. So even, for example, even if you felt there was going to be no rate cuts this year, the probability that there could be a recession or what have you and rate cuts, then you kind of go, well, when they usually cut, it's normally quite aggressive. So even though I don't think there's going to be any rate cuts this year, if that was your view, you have to start pricing something in. I don't think so that's just purely from a rate side. I don't think that gets so explicitly priced into other asset classes. But I mean, you say this, equities have been hitting record highs. So I guess some would say we have priced in for this easier environment, But again, I think when we actually can fully embrace it, and then you start putting on positions and trades around that, I think for the last few months we've kind of been in this kind of uncertain wait and see mode, because you've had this like stability of the US data. We keep pushing out rate cut expectations. Is this cutting cycle ever going to come? Well, now it's here, and now
Yeah,
there's no doubt
it's
about
confirmed it. They're not rolling it forward anymore.
No,
Yeah.
exactly. And even up to recently, you've had a lot of Fed speakers sort of saying, well, we're still waiting on the data. And so I think it was quite a big change. And
But you've been calling the rate story for a while. So we finally got that. So that's the main macro story.
Yeah.
But obviously crypto doesn't only care about that, right?
No.
Crypto really cares about the election, it seems, right?
Yeah, and actually, I thought that was a big thing last week. Obviously, we had like the DNC convention. It actually feels like maybe we've gone peak Kamala now. You sort of mentioned like in the introduction here, I think the RFK.
It's big news, right?
Yeah, I think that's quite big news. Trump actually last week sort of took pole position. If you look at Polymarket. So
by how much?
In like he's now like 50% to Kamala 49%.
Oh, so
it's but she was ahead. He's now kind of and again, markets that like trade, direction of change and all that sort of stuff. It feels like maybe she's peaked out a bit and he's coming back. So I think that kind of helped a little bit. Bitcoin's bounce.
Yeah,
but I think we still we tentatively broke out of that 58, 62K-ish range.
Yeah, well, we popped to 65 and we're drifting as we speak, right? So if we now hold that level from from coming back to it from the upside, then we can start to springboard off it, right?
Yeah, and I still think we spoke last week about digesting this supply overhang. I still think we're trying to digest that.
Yeah.
I still think commitment to risk in summer markets is low. So
people are coming back now, though.
Yeah.
Right,
yeah.
Especially next week, right? The next couple of weeks, they're really going to come back.
So I think you'll get people come back to their desks going into September, thinking, right, what trades do we want on now? What's the
Q4 crypto rally,
and that's how I think it'll play out. But we need like real demand to come in because we keep getting hit by these kind of this negative supply dynamic. And you need kind of real demand to come in. And
you need people to commit capital to the trade, right?
Yeah. And my one worry and caution around that is how much this election kind of just keeps everyone sidelined in terms of really strapping on like some proper risk. And
yes and no though, right? Because the election is the catalyst for crypto. It's quite an unusual thing that you've got this polarization, and it's like this is such a big catalyst for crypto. So I think. Yeah, it will be a function of Trump odds and how bullish people are getting around whether Trump gets in or not. And then that will then filter through to quite a strong correlation to Trump odds and crypto markets, or Bitcoin especially. Yeah. Right.
But I kind of feel as well, like even if Trump gets in, obviously Trump getting in for Bitcoin is like the uber kind of bullish case. But it'll probably be a big vol selling event like through that.
If we rally into it, because we're pricing in a Trump win and Trump does win, it will be your classic sell the news event, right?
And equally, I think the flip side to it is if Kamala wins and gets in, I don't think that's like, oh, well, shit, we'll
it'll be a buy the dip event.
Yeah, it'll be a buy the dip, and it will at least she kind of feels like they've softened their tone around crypto. Now that might just be purely for the electorate and just into this, but. It feels like there's a softening of tone. There's more and more political support on both sides of the aisle for crypto now.
Although didn't the SEC just come after Kraken though?
Yeah,
they did, right?
Yeah,
they seem to still be having fights with various exchanges about securities and not what.
But importantly, they keep losing the fights. So
true.
Yeah, but I think again, like Trump would obviously be a nice tailwind. It'd be a nice narrative. But I don't think
loves a narrative to latch onto, doesn't it?
Yeah, and it does, and we often trade those things, right? But I think like outside of it being a short-term impact, I think the macro is probably a bigger thing. I say we're going into a rate cutting cycle, liquidity is picking up, like global money supply is picking up, all these things, and then the dollar breakdown is like shouldn't be underestimated either. Like that's huge because if you think there was a lot of a lot written about the dollar wrecking ball. I wrote a lot about the dollar wrecking ball and, the dollar as the global reserve currency, when the dollar strengthens, it tightens financial conditions. It kind of puts a strangle on trade. You're now seeing that in reverse. So that will help actually a global kind of reflation trade that helps global financial conditions and liquidity. All those things are good, not just for crypto, but for all risk assets. So yeah, I think Q4 is going to be really interesting, and as people get back from holiday, can start strapping on some risk, and finally, I think then we can start to see us taking out the highs. I think we'll take out the highs before the election. Just on the macro.
Yeah, I think you're probably right. So from a vol perspective this week, realized vols remain pretty low, right? We're back in the mid 40s now. So whilst we did get that pop, it wasn't that aggressive from a day-to-day, daily move type perspective. So the front end continues to get hit, right? Short-dated optionality in September, October continues to get offered. Anything that contains the election, November, December, etc., is holding up much better. So that's been a theme that I've talked about and is continuing to play out. Outside of that, Ethereum vol's been coming down a little bit relative to Bitcoin. So whilst that vol spread was at 10 vols, it's kind of come down to about 8 vols. Again, something that we talked about, given that Bitcoin was the main one with the narrative for the election. I kind of felt like that seemed a bit too much of a vol premium for Ethereum. So that continues to happen. And then lastly, call skew in general in the long end that has been quite well bid has started to trickle lower. And then in Ethereum, we still hold a put skew in the front end, and Bitcoin's at around neutral. So it's like saying in the near term, Bitcoin's a bit more bullish than Ethereum. And then in the long term, both of them are bullish, but people aren't paying up for calls like they were before, basically, right?
Right.
So that says to me, people are thinking, the rally happens actually in Q4, not like next year. And Bitcoin drives the rally, basically. That's kind of what the options market is saying.
And how are you positioning for it?
So I put a couple of trades on that I've still got on. I had some call calendars, September, November. Those have been playing out quite well. I've got some call ratios to September as well. I don't really think we smashed through 75K to September. So I've got some like 62, 75 call ratios on in September. And then
So just for those who...
Sorry,
we tend to say about these things, so call ratio, so you're buying the 62...
Yeah, so this was weeks ago. This was weeks ago, like when the market was lower, I was buying 62K calls in September, and I was funding them by selling multiple 75K calls in September, because I was convinced that whilst we may bounce before end of September, the real breakout doesn't happen until Q4. So I'm saying I want to participate in a move back into the mid-60s, which is kind of what we're getting, right? But I don't see the real break of 70, 72, 75K, whatever. I don't see that happening until October, November time.
So us kind of stalling around here.
Suits me well.
Perfect, yeah, because then that's...
Yeah, I want the grind higher in September, basically, which I think... Because I think that supply overhang is going to continue to kind of make it hard for us to really break the top of the range in September.
Yeah.
But I think then Q4 is where the seasonality kicks in. We're getting closer to the election. We get a better idea. We come out the other side of the debates as well. We get a better feel for who's leading in the polls and stuff like that. So I think then crypto gets potentially excited to the upside, right? But speaking of that, I got to catch up with the guys at Abra Prime. They had some pretty strong opinions about the election as well, what the implied move was, and generally I quizzed them on how they trade, what their trading styles are within crypto, and where they see opportunity. So check out what those guys had to say. Hey guys, so we've got some really cool guests on today. We've got Abra Prime Services and Wealth Advisory Platform. We've got Head of Trading Bob Wallden here, and Bohan Jiang, Head of OTC Options. Welcome to the podcast, guys.
Great. Thanks for having us.
Yeah, no, it's a pleasure. So why don't you give us a quick background on sort of where you guys are coming from, where in finance, and then how you got into crypto, and then what you guys are doing over there at Abra.
Sounds good. I'll get started. My name is Bob Wallden. I'm the Head of Trading for Abra. Abra itself started in 2014 by Bill Barheit. Originally, it was an app where you could buy or sell 50, 60 cryptocurrencies. From there, you could also borrow lend as well as a variety of other services. It pivoted in 2022 to a full institutional offering. And at that time, looked to hire individuals that had either, built businesses or ran businesses in TradFi to really help, develop that business. Myself, as Head of Trading, I oversee our DeFi prop team, our OTC trading, our derivatives offering, And in general, the risk here at Abra. My background itself is I did 6 years at BNP Paribas on the market making side, as well as on the prop side for them, all in FX. Then went to Deutsche Bank when they were number one in the world in FX for both P&L and volume. Was a prop trader / market maker for them. And then did 8 years for a firm based out of Chicago, mostly on the global macro side, running a variety of strats for them. Before, being a trader, you want to kind of learn, what else is going on in different ecosystems. And so I pivoted to crypto and then was installed as head of trading back in December 2022.
Wow, that's some really broad experience you got there, Bob. How about you?
Thank you.
How about you, Bohan?
Yeah, so I guess for me, I started my career at Goldman in the FX options team. So I was, market making and trading vanilla and first generation FX derivatives. Started in G10, so mostly focused in yen, Aussie, Kiwi, and CAD. And then I moved on to trade sort of G10 and EM exotic and correlation products. So more of a broad spectrum of quoting, first to second gen exotic FX derivatives. And then sort of looking at them on a relative value basis in FX space. And then fortunately enough, I was, somewhat interested and always dabbled in crypto in my own time at the time. And so at Goldman had just started their crypto derivatives desk for kind of CME listed and OTC options. It kind of went under the same umbrella of FX products for the business. So I essentially, raised my hand and, signed up to do the job in New York. I was the main trader for Goldman. They're market making and trading OTC and CME listed options, futures, spreads, really getting a front row seat to seeing the CME, crypto market mature and evolve. So through that experience, I always thought there was, significant opportunities in sort of dislocations in the vol space. But CME was more so a less liquid proxy to the physical and larger, Deribit market. So I decided to join Abra back in April, and now really focused on running the kind of market making and principal trading strategy for Abra.
And do you think like a lot of those ARB opportunities have kind of gone away now between CME and Deribit, or do they still exist?
I think they still exist. So
okay.
Fundamentally, I think so CME vols are known to trade at a premium to for example, Deribit vols, to some extent to collateral and margin requirements. And just because it's a less liquid market as a whole. And so that market or sort of that discrepancy is much smaller now, but it still exists to some extent.
Yeah. Similar for BITO options, I believe, right? On that futures ETF, that they always trade at a bit of a premium as well.
Right, exactly. That those will even be, I think, perhaps even wider than the CME options.
Yeah, I'm sure. Okay, great. And so then Abra, you are wealth advisory prime services for primarily high net worth types, or is it all instos you're kind of targeting?
We're mostly targeting institutions, family offices, funds. What we like to say is crypto corporates is kind of a business model. We built ourselves.
Like a miner. Would a miner be a crypto corporate?
A miner would be a crypto corporate. An ATM would be a crypto corporate. Originally corporates, and we were in the FX space, was like your Apples, your Googles, those are your corporates. In the crypto space, miners, ATMs, anyone that is looking at like BTC. And so that there comes in both spot and options, services that come in for both those. And that's what Abra has pivoted to. It's just a prime services and wealth advisory, for its SEC registered RA.
And you mentioned so your background's FX, both of you guys. So have you noticed any big sort of structural differences between crypto and FX markets? Like you adjusting to that new world of much higher vol? FX obviously trades like 10 vols expensive for an FX, whereas crypto is like, 50, 60, 100 vol. So how have you kind of found that adjustment? And are there any big structural differences in terms of the landscape there?
We both are different in our approach to volatility. I guess I'll go first. So I am more of a momentum long vol trader. I actually never had the ability to be short vol. So I've only learned to be long vol or long, trade spot, and then use options alongside that to kind of add leverage when opportunities persist.
Right.
So, my view as a trader was if a new theme came out, you would immediately buy spot, and then all your option pricing was electronic. So you would effectively pay the GUIs for volatility because it was a new opportunity, and you could kind of like catch the market offsides. And you saw that very much in the hedge fund space, a new opportunity, let's say if the ETH ETFs came out, you'd be buying ETH spot as well as buying ETH vol at the same time, kind of capturing an opportunity and then taking it off as the view realized. I view
a very short, is that a short frequency trade? So you don't hold the vol for very long.
Oh, I mean, you could hold it. I mean, the trades sometimes take a month, 2 months.
Oh, okay.
To realize. I mean, yeah, you were holding it as long as it took to, you were buying, digitals or one touches, 1 month, 6 months. I mean,
Okay.
I've bought a digital or a one touch that was only 3 days and it hit. So, I mean, it really depends. It really, your job is to kind of produce, and from there, you see opportunity and to take advantage. I think, Bohan I looked at is like, it's a very sentiment driven market. And so being sentiment driven, you kind of have to be on the front page of like what's driving things, and then biding your time in the other space, which, you don't want to be long vol all the time in crypto. It'd be expensive, right? So you kind of have to play both sides. But from FX, I mean, I think we still think it's a very nascent market. You don't have the pricing power yet. Everyone's more OTC based. There is some vol pricing, but it's not it's not built yet for the funds to come in and really just buy vol and kind of like capture the market on all sides. I think in time it will be. And I think that's what we're focused on at Abra is building for the next 5 years on institutional space for where we see it headed, from what we've done at DB, at BNP, at Goldman, where it's going to, clients will want you to take down and warehouse significant amounts of risk and be a partner with them for risk transfer. And that's going to be our focus at Abra.
So it's about that distribution. It's about that liquidity that you provide. For example, what's a big clip now of Vega for a client to do that's going to be like, whoa, okay, that's going to be hard to take down on risk, and we'll work at agency. Like if I was a client at a fund and I wanted to trade 100 grand of Vega, is that a lot?
I think 100 grand of Vega is okay to take down. I think when you start, that's kind of the upper limit. I think when you go to like, under 50K, 200K, that starts to, people start to notice it. And then, that starts to impact the market a little bit, especially if it's on the screen, right?
Are there many clients who are trading that kind of size these days?
I don't, so I would say not on a very frequent basis, right?
Right.
And so that's when really, I think in crypto, you have this structural, I guess, vol selling flow that's smaller and sort of, continuous through time. And then you also have directional players or large speculative bets that come in and buy a bunch of vol at certain inflection points in the market. That imbalance, is what creates kind of dislocations for volatility really in the market.
Mm-hmm. Mm-hmm. Okay, cool. And what about you? So you mentioned your trading style, Bob, is more long vol. How about you, Bohan? I'm guessing you're more comfortable being a vol seller?
Yeah. So I started trading FX vol in sort of the dollar CAD, and that's a 5 vol market and where you just sell vol, and that's kind of your status quo because, it's anchored, the Canadian interest rate policy is anchored to the US, and sort of dollar CAD basically doesn't move. And so I think in FX vol, you have a much more structured, more balanced flow, and it's a much more mature market, right? And so you kind of know the players, the central banks, their kind of reaction function, and they really want to, they don't want a very high volatility for their currency, right? And so how to anchor to a certain set of factors, in terms of interest rate differentials or fundamentals. I think in crypto, it's much more noisy. To some extent, it's like EMFX, but into much worse than that, you have much wider ranges, and it's a much more opaque market with a set of different players. So fundamentally, crypto has a higher base vol. It trades more like equities, and it trades more like sticky by strike, for example, where in FX vol it's more sticky by delta. And fundamentally, you have I hold a short vol bias because the volatility risk premium is very high. If you were to run a back test, short straddles, short strangle strategies, you actually find a positive annual return, pretty much only on short vol strategies. And sort of interestingly, you find them more on, the short dated 1 week tenors than 1 month or 3 month.
But just for the audience who may not know what volatility risk premium means, how do you measure that?
So fundamentally, you can think of it as just the excess of your, implied volatility over your realized volatility. So the, you know, the price of the option that you pay versus, what you kind of realize in terms of spot moving, on a daily basis.
And how do you think about the realized vol in terms of what the right realized vol is to measure? So, for example, you have a 10 to 15% gap down on the early August. That blows up your realized vol now for the next couple of weeks, because that massive move is being captured in like a 30-day realized number. But if the market just settles down after a few days and then stops moving, that realized implied differential is not going to help you, right, in terms of making the right call on vol, because we're not moving anymore. So how do you decide? How do you adjust that look back window? Like, what is the optimal realized vol frequency that you're looking at to really get a feel for what the true realized vol is? Is there a way of looking at that?
Yeah, I think in one sense, crypto vol is very subjective. What I mean is that you can only measure it with respect to how you capture it. And so, because you tend to have very wide ranges, your true range in terms of your low and high of the day is much, much higher than the close to close. So that your higher frequency, more complete measures of realized that capture ranges, things like a Parkinson realized vol, for example, will be much higher than if you just measure the close of, day one to the close of day two. So if you are a, long vol trader, and you have this daily mean reversion effect, but you're not able to capture that, high to low in terms of your trading your gamma, then, you might not realize that high vol that your metric is telling you. So I think what really matters when you kind of trade vol in this market is you need to measure the realized that you actually capture, and not actually, what the implied vols are telling. The implied vols are just sort of the price the market, the market is pricing in, but the mileage may vary depending on how you decide to trade your gamma and how much you trade intraday.
That's a very good point. I totally agree with you. But is there an optimal way to trade your gamma? Like, is it a high frequency? Because crypto moves around like a madman with these wide ranges. Do you optimize that and like kind of track that and say, right, in this current regime, we should hedge every hour? But actually in a different regime, when we're seeing the data telling us, no, we're better off hedging every day, like once a day. Like, do you track stuff like that in terms of optimal hedge frequency?
Yeah. So I think one basic framework I like to use, because of that daily discrepancy between close to post vol versus high low range. If you're trading short vol, I think I like to lean more into hedging close to close.
Makes sense.
Because you're just trying to capture a lower change.
Yeah, you don't want to get chopped around. Right?
Yeah, exactly. Yeah. Whereas if you're trading long vol, you have to be more aggressive, quote unquote aggressive, in your gamma trading, and try to capture high-low ranges on a one standard deviation intraday move or exactly. more. And so you kind of, have, in your system, you kind of have levels where you're trying to hedge that gamma to say, hey, at least if spot being reversed from here, I will, have monetized some of that gamma already.
Okay, interesting. No, that's good to know. I mean, these are all the headaches that I used to have when I was trading equity derivatives as well, right? And to decide, what is the optimal hedge frequency? Because I always used to be of the mindset that if I'm going to be long gamma, I don't want to hedge it every standard deviation, because I'm just going to neutralize the convexity of that P&L payoff, right? It's like, the reason I'm long gamma is because I want a big move. So I'm going to hedge it after every 1% if that's the break-even move. What the hell am I doing, right? There's no point. So I've always felt like that was long vol. Like I tried to sit on my hands if I'm long vol to capture the actual quadratic P&L curve. Otherwise, I might as well be flat or short vol. Right.
I would agree with that. I think it changes, in certain places, right? Certain funds, they want you to capture like your premium, right? They want you to you can't have drawdowns, you can't lose your entire premium on a trade. You have to kind of monetize things, and they kind of make the traders or PMs adjust for that, right? And so you have these gamma hedgers, right, in TradFi that like all these PMs are having that just takes the standard deviation move, and so they just don't lose everything, right? And I think But in crypto, like you get bigger moves, right? So you kind of like, I take the approach, which is why I like it, presently versus FX, which, I'm very familiar with the 5 vol market and dollar CAD. And I think it makes sense to like kind of expand out your horizon for where you see a move heading, right? You're trying to capture a big move and then shut it down and move on to like a trade in a couple weeks or a couple months as opportunities persist.
Yeah.
So I think it can be played both sides, right?
Speaking of opportunities, so obviously markets are quite interesting right now. There's been a lot going on. We had that really big move down in August. We've recovered a bit since then, but crypto's arguably not recovered quite as well as equities has. US election seems to be a really big driver for Bitcoin, especially. Thoughts around that? Like, are you, what opportunities are you guys seeing out there? How are you setting up? Like the election bucket was listed on Deribit because they knew that everyone would want to play that event, and it's already starting to price in quite a lot of event premium. Last checked, the forward vol is like in the 80s relative to a base vol at around 60. So that how do you guys think about that? Is that too rich now? What is the implied move for the election? Does it make sense to buy it? Does it make sense to sell it? What are your thoughts?
Yeah. So I think, right. So in terms of flows, we've seen a lot of interest in the post-US election tenor. So either December or, the actual 8th of November expiry strike. Calls, call spreads, calendars, with the really the narrative being obviously that Trump will be super pro crypto if elected. I think, in the past month or so, really after the Nashville event, there's been this narrative that Trump election odds will trade closely tied to the price of Bitcoin. I think this correlation is more so like self-reinforcing by market participants. So I would expect this to persist if, in the next couple of months as the market gets more focused on the election. And yeah, we're pricing a very big election weight. And so the implied gap, so the floor vol, is now at 82 in BTC. And so the implied 24-hour straddle break even, and this is highly dependent, by the way, on how you market term structure, your weekend variance, and sort of the variance for other events. But, an estimate or a point estimate would be a few percentage points, around 10% of a daily move right now. And so my opinion is that, this is getting fairly priced. But, there's no strong view in the sense that, let's take, for example, another asset that's been historically tied to Trump policy, dollar MEX, the Mexican peso. That's had an election break even right now of 5%. In the 2016 election, we saw 8.5% move in dollar MEX on the night of election, when high to low range of 13% when Trump was elected. So, even though I think the weight is fairly priced, I think, it's the path dependency of the election laws into the event that's going to be important. And it's, it's not to say that crypto cannot move 10, 15% on the night of election. So I think in terms of trade ideas, I like to own the Harris-Trump debate at the start of September. I think this will be the first time these two will go head to head, with the previous kind of Biden-Trump debate, very obviously clearing the polls for the favorite candidate. And I think if you really have a 50-50 point flip into the election, then the election weight is going to squeeze much higher, given the degree of uncertainty regarding the future of crypto regulation and policy in the US. So just on that point, however, if we have Trump as a kind of a clear favored winner headed into the vote, I think that there will be opportunity to really sell skew or sell riskies in Bitcoin. So buying downside, because I think the market will once again bid up the upside call, expecting like a Trump victory, but that will be pretty much priced in. So I think the clear risk reward trade at that point is to own a tail hedge in case Harris, actually gets elected.
And not even that, right? Even if Trump gets elected, but the market's already front run the move. We saw it happen on the Nashville speech, right? He said pretty much what we wanted him to say, kind of, right? He wasn't as aggressive as RFK Jr., who now has teamed up with him, by the way, which is why we popped recently, right? Mm-hmm. But it's kind of, if we front run it and everyone who needs to buy it has bought it and all the speculators are in, even if they get elected, you might get a knee-jerk higher, and then you get your usual sell the news event that we constantly see in crypto, right?
Yeah. It could very well be like the ETF announcement, like the Trump Nashville event, like the, where spot really does not do anything and vols just get crushed.
Yeah. I think it's safe to say the vol will get crushed. It's just the question, where is it going to get crushed from? And like you said, with the debate coming up, you'd be mad to be selling that event vol, even if you think it's expensive right now, right? Because like you say, it's going to stay expensive. If it's this expensive now, it's not suddenly going to become less expensive closer to the election as everyone's talking about it and there's nothing else on anyone else's radar, basically, right? So yeah, I think owning those buckets in December and November is a bit of a no-brainer relative to funding them with shorter stuff. Okay, but what about Ethereum? So this is all Bitcoin narrative and driving Bitcoin and stuff. Does it drive the entire crypto market, or does it just really impact Bitcoin more than everything else?
So my view here is, we have pretty much the same, because Ethereum has a higher base fall, we pretty much have the same extra number of days of, extra days of variance priced in on the curve. So it'll just lead to a higher kind of break-even level due to the higher base fall of Ethereum. So
it's a bigger move on Ethereum is being priced in than on Bitcoin, right?
Yes. And so, we can talk about whether or not that's appropriate, because, we can debate whether or not the Trump election is really about a BTC, driven move, or the rest of the crypto complex will catch up as well. And really at the margin in this type of pricing, I think unless you have a really strong view on that, I think this pricing is sort of appropriate in the sense that this Trump election is likely just going to create regulatory clarity for the entire crypto market as a whole, with each crypto asset with their respective betas moving appropriately. So I don't think there's a very large opportunity in terms of vol market for the U.S. election pricing right now.
Okay. Do you agree with that, Bob?
I mean, I take it from a very macro level. I traded, the first Trump election.
Yeah, same.
So I remember $MEX doing that large move, right, and catching people off guard. It was a vicious evening, for $MEX traders and for option traders. And I believe that something Abra's been hammering home, has been the fact that we believe vols are underpriced, and now that the risk premium for the election should incorporate higher vol levels. Structurally, crypto has kind of been built to sell volatility, and so we believe there's a lot of risk out there, going in. So even though something is priced at, let's say, 10% for realized vol for that evening, you never know going into the election what could happen, because it could just be messy. So in general, we just view this as no matter what happens, obviously the first debate matters, but crypto vols should just be priced higher than what they've been previously, as crypto has now become a major election point. And that's been kind of our macro level. And so we've been, better buyers on extreme dips, in that space. But, I think we just view it as that now it's in play, and be prepared into Q4.
But why do you think crypto's kind of been left behind by this risk rally a little bit, though? Right, in the last couple of weeks.
I mean, I view them. I find it funny now that everyone's a BOJ, expert in crypto. It's a risk reduction, right? So in general, everyone that's ever traded FX knows about the BOJ and knows about pricing. And in general, everyone has done the carry trade or MEX yen or Turkey yen, and it all makes sense. I think coming out of it, you've had a lot of conversations of late where you're seeing people have been, they've hit their risk limits or whatnot, and funds are kind of reducing staff no matter what happens. But in general, the market got caught in a position one way, and from there it had to risk reduce. And now it's bouncing back on the overall macro theme that the Fed is just cutting. If they cut 25 or 50, does it really matter? The path is that they're cutting, right? And so we could argue about the minutia around non-farm payrolls or CPI, but in general, the path is that they're cutting. And then we had a one-off volatility event where the BOJ just kind of caught people off sides, and it cascaded into, a 3 standard deviation move for, a variety of risk assets. But, I think equities move first. I think, and I have highlighted this, if we see a break above 72 in BTC, that's kind of like a risk on, momentum trade there.
Huge. That level is getting huger and huger by the month, because it's held the market for so long.
Yeah, and I think being patient traders, you see it. Okay, now we're just in this range. I'm just going to highlight BTC because I just think it's the major. So you look at that chart first. But
everyone knows that chart. Yeah, exactly.
Yeah, but in general, it's like looking at a Eurodollar chart in FX or like a Nasdaq chart, right? In equities, right? But in general, once we get above those levels and you see momentum, me being a momentum trader, like that's now there's a trade to do. There's something to do. Right now, we're still mid range, but you're kind of positioning yourself, saying like, if this happens, how am I positioned, right? And for Abra, we have views on these things and we have, positions either way. So, we are watching, these markets, we are engaging in these markets. And I think crypto will catch up to the broader risk rally we've seen. But in general, I view the equity move as like a lot of people got hurt and it's just bouncing back in line with the overall macro theme, and so, a lot of people probably cut winners at the lows, and now they're being forced, it goes back up fairly quickly, based on the macro environment. If the Fed was hiking, it's different, that I don't know if we'd be bouncing, but they are cutting.
Crypto's had the overhang of all this Mt. Gox selling, US government selling, that sort of stuff, right? So I guess the question there is, if that's keeping a lid on crypto artificially, when does that lid get removed? So crypto, and has it just been removed by this RFK news into the weekend? Is it a case of, okay, the selling's out the way now, it's been well telegraphed, we know about it, but that selling has kind of been front run, and now are we ready to go, right? Or do you expect that selling, that overhang, to persist for another month or two?
My opinion is crypto is a sentiment-driven market. So I think when it's in play, everyone wants to be involved. And I think if we break above those levels, you'll see a fair bit of sentiment driving it higher. I don't know if Bohan has the same view of me, but I have always viewed it as looking at, you could put in a correlation matrices, NASDAQ, you could put in commodities, you could put in, twos, tens curves, you could do anything. And it all correlate for some period of time. But I believe the more macro correlation is just when it's in play and it's moving, you like the break higher, earlier in the year, then it goes fairly quick. And so we're really looking more at like the sentiment around it. And I think those overhangs from Mt. Gox, those will dissipate over time because they're really just short-term overhangs. The medium-term trade is really to work to the top side, right? Maybe Bohan, you have a different view.
Yeah, I mean, I agree with you in terms of the sentiment and sort of the momentum part. I think, I think we're really close to a time where, that overhang is over. I think what was important really was Powell confirming on Friday that, we are going to start this, easing cycle. And he essentially confirmed that. And I think, we've had a very difficult summer for crypto. It was very choppy, very liquid. We've had a lot of overhang, and we, traded by and large a very range-bound environment. I think right now the market sentiment is wiped out. Market participants can conditioned to quickly take profit, sell any small rally because that's what's worked. You needed to, sell every small rally because everything, was sold. Every bounce was sold in the summer. So I think right now many market participants are kind of sidelined and underallocated to crypto exposure. I think many people in TradFi are sort of still on vacation for the summer. Liquidity has been poor with crowded positioning, very punished, like the yen carry trade unwind. I think, most people have just been waiting for liquidity to return, better price action, a catalyst, or simply late Q3, Q4 to make allocation decisions. And we're kind of right there right now. And so I'm very, positive in the short term because I think in the next couple of months, we're going to see the liquidity return. I think we're going to see all these sideline market participants rush back in to regain that exposure. I also think that liquidity, both in the US and globally, is going to be kept abundant going to the election. From a political perspective, I don't really see, the Democrats, affording a risk-off effect or a market crash into the US election. So I think, we may very well see range highs, quickly ahead of the US election.
Yeah, I can sympathize with that view. It's not going to be a good look with market crashing ahead of the election, right? So if they do have the power to kind of hold the market up in any way, then they're likely to put that pressure on to do that, right? So, all right, guys, it was a great chat. Really appreciate hearing your opinions and your views around what's going on in crypto markets. And I think we'll call it a day. So thanks a lot, and we'll chat again soon.
Thanks a lot, Imran.
Thanks for having us.
Take care. Okay, so remember, like and subscribe if you want to get more guests like that on. But I thought those guys were super insightful. What do you make of it?
Yeah, really interesting. Interesting as well, some from an FX background, just to hear their stories on that side, and also some of the comparisons around certainly trading into this election cycle.
I like the fact that we had one long vol guy and one short vol guy, and they were kind of talking about their styles and like why they see it the way they see it, right?
Yeah, and they I forget which one mentioned, but this whole idea of like, you know, trading on the narratives, and then once the narrative catches, then you can kind of trade the momentum on it. And I definitely feel like with crypto at the moment, it's kind of lacking that narrative for everyone to really latch on and find any momentum with. So that was interesting. I thought as well, they make a point that, you know, this kind of range bound that we've been in, range bound trading, like people, for all the bearish sentiment out there, we've just gone nowhere for a few months, right?
Yeah, it's been a typical consolidation after a really explosive rally, right?
Yeah, and we had one kind of, I guess, decent dump that was around the dollar yen carry trade unwind and all that stuff. But otherwise, like really, we've been in a 60, 70K range for forever after a really good move in the first quarter of the year. So, I thought that was interesting, the points they made around that. One thing I kind of slightly disagreed with in terms of thinking about this election compared to, because I was there in 2016 as well, and I remember the dollar MEX moves that were huge. And two things on that, I guess, is that Trump was a bit more of a surprise than he would be. This time it feels like 50-50, right, into the election. But the other big thing is Trump was such an unknown quantity back then. Like, you know, he was bashing, like, you know, I'm going to build a wall and make Mexico pay for it, drain the swamp. There was all this sort of FUD around the idea that he would literally, he'd be nuking everyone and starting World War III the moment he got in. So there was a lot more uncertainty. I think this time there'll be a more sort of sanguine reaction to it.
He's been there before. He's been in that seat for 4 years.
Yeah, and things were kind of okay, right? Like him or dislike him. Like, in fact, like,
what I find, and we were talking about this earlier, right? It's like people talk about Trump as some scary character because they're like, we don't know what he's going to do next, right? He could just like turn around and do a U-turn on policy or whatever, you know, just because he's gets pissed off with someone, right? But what they don't recognize is that's what makes him scary to foreign leaders. And that's why they fucking listen to him, right? So I feel like that argument doesn't hold as an argument to be scared of Trump, because he's actually on the American people's side. That they're the people that he's playing for. So he's going to screw everyone else potentially, right? But if they're scared that he's a credible threat to them, then they might actually come in line, right? I think one of the problems the US has had, and I'm not going to get overly political about this. I'm not a Trump fan or a Kamala fan, right? But I'm just seeing it. I'm calling it as I see it, as a neutral. I actually think none of the above, right? Have you seen that film, Brewster's Millions? Back in the day?
No, I haven't.
You haven't? Oh my God. I was putting tweets about this, and I was probably the only one who found it funny, right? But it's like, it's an old film from like the 80s or whatever, Brewster's Millions. And Richard Pryor is this guy who inherits billions from his uncle. And he's got all this money, and he basically has to spend it. I think he has to spend like 30 million in 30 days so that he unlocks his true inheritance of 300 million. So basically, one of the ways he spends money is he does a political campaign, right? He runs for, like, I don't know if it's president or what it was, whether it's mayor or president or whatever, but then he doesn't want the position. So his campaign is called None of the Above. He just wants people to not vote, right? Right? And he spends like loads and loads of money. So I just joke and say none of the above is what you should vote for, right?
But like, I think like if you think into Trump in 2016, and the kind of narrative was he will start a war with Russia, he will destabilize the Middle East. Well, that's all happened under Biden in a way. So that's no longer a fear anymore. We're essentially in war with Russia. The Middle East is unstable. So I kind of think the outcome either way, it's either status quo under Harris, or it's a Trump that we kind of know. We've had 4 years of that. So
What do you think about
we also like certainty in markets, right? So
what do you think about the implied move? Like the implied move at like 10 to 15%? Like, do you think crypto? Think that's about fairly priced? Or do you think that's too high?
it's probably too high on the event itself. And actually, that was another good point the guys made. Was about actually the event risk around the what do you call it?
Debates.
The debates. Yeah. So that's probably actually going to be as significant because once we start to get maybe a little bit more feel for who's going to actually win this thing, that might be the bigger kind of event risk.
Yeah, because when you're near 50-50,
yeah,
the incremental impact of it going to 60 towards someone is quite big.
Yeah.
Right. Yeah. I hear that point.
Yeah. So I think that's quite a good point. And I don't know who knows, like, again, like, and people will accuse me of just having this perma bullish bias, but I would say again, just from a pure risk reward, like, Kamada gets in, it's status quo. And okay, you could say that there's still a bit more of an aggressive stance towards crypto, and the knee jerk's definitely going to be we get hit a little bit. But I think then people go, well, do you know what? We've been dealing with this administration really for the last 4 years, and okay, Trump offers this could actually be really good for us. And again, I imagine like everything he's talking about would take forever to kind of get put into place. So we might all calm down a little bit. So that's where I'll be a little bit more. I won't get too carried away on that in itself. But in terms of risk reward, it's either status quo or we've got this uber bullish, on the face of it, guy coming in. And particularly if he's got RFK in there as well. You've got talking about putting Elon Musk, giving him a role in government. So there's some very potentially pro-crypto people. So we'll have a nice move. How big that is, I don't know. But I always think the macro is just as important as this stuff. And for me, probably maybe the bigger thing will be we just remove a risk factor and we have a little bit of certainty, and then we can get on with like, trading other things that are more fundamental.
All right, so I think we'll call it a day on that one. But it looks like the key takeaway still is very much Bitcoin is going to be driven by the political narrative and the odds of this election. And I think the point Bohan made in that clip about the next debate being a key data point for crypto is very key. So look out for that on 10th of September. All right, guys, we'll catch you next week. Cheers for watching.